roll call and make sure we have a quorum.
Absolutely. Chairman Krasansky.
I'm here.
Director Corcoran.
Present, Madam Secretary.
And Director DeMarchi.
Present.
Director Zarofsky is not with us, but we do have a quorum of the audit committee.
Excellent. Great. The draft minutes from December 8th, 2022 was our last meeting. I was not there. And so if the people who were there take a look, and we can approve those if they look approvable or make any changes.
Mr. Chairman, I reviewed the minutes and I think they are approvable, and I'd like to make a motion to approve the minutes from the last meeting.
Oh, Vita's muted, but I saw her mouth. I will second.
I will second that.
In favor?
Aye.
Abstain. Great. Okay, great. They're approved. Thank you. We have a presentation, KPMG. They're going to explain. There's a change in the lead from last year to this current year. I hope they talk about that. But the firm is the same, which is great. They've been doing a really good job for us. They're going to just talk about their plan for the audit of last year's numbers, and explain that. Go through their plan, and I turn it over to them.
Perfect. Thank you, Charlie. Good morning, everyone. It's hard to believe last year's numbers are already last year's numbers, just within the last 5 days, but they're already old. So good morning, everyone. Marty Dunbar, again with you for one final time. As Charlie mentioned, I every 5 years the lead partner on the audits of the state of New York or any affiliates that have adopted a 5-year partner rotation must have their partner, as it sounds, rotate off and hand the baton onto another partner to kind of roll on. So we'll continue as a firm to service you throughout the balance of our current 5-year term, which I believe is a couple more years. I'll be transitioning off, and Jeff Coach, who's joining us here today, will be filling in my shoes. Jeff will give a quick summary of who he is, and lead the charge this year. I work with Jeff and have worked with Jeff on a regular basis for several years now, well over 10 years, and he'll work very well with not only management but the committee. So you're in very good hands. And the other Jeff Mabb, continues on the account, who's been serving as the senior manager now for several years. So a lot of other continuity and fresh or familiar eyes, in addition to a nice fresh new lens that Jeff Coach will be providing. So Jeff, I'll hand it over to you to take the members of the committee and management through the presentation. And I really enjoyed my tenure, everyone. This was a fantastic experience, and I hopefully have an opportunity to serve you again someday down the road, and look forward to seeing you then. But in the meantime, Jeff, take it away.
Perfect. Thanks, Marty. And I hope for the committee I can serve you just as well as Marty has these past 5 years. And so a little bit about myself. I'm in my 15th year here with the firm. I'm a managing director in the firm. I've been serving most of my career in state and local governments, looking at entities similar to EFC, and so bring that experience along with me and a good vast knowledge of some of the GASB pronouncements and such. So we'll kind of dive into our presentation. We did send that ahead of time. I hope everyone had a chance to take a look and read that. I'm going to skip down to the section that's our update for the audit plan here, the 4th slide in the presentation. And so there are a couple changes that will be part of this year's audit plan. Some will be related more to what the management has to implement with the new GASB pronouncements, specifically GASB 87, will require that all leases be presented on the face of your financial statements. That will kind of result in this lease asset and liability being presented more consistent across industries. There is also GASB 91, which is related to debt conduit obligors. That basically took the old GASB implementation interpretation number 2 that probably gave this option historically to either present the information on your face of your sheets or as disclosures, and kind of converge those together to be one, which would be the disclosure in the financial statements. EFC is already doing that, so that should have minimal change for this year related to EFC. Related to our plan, we've incorporated our audit procedures to kind of bring these 2 standards into scope and be able to perform procedures to evaluate management's implementation of those. And then on our side, there is a new auditing standard, SAS 145, which has to do with the entity and understanding its risk and assessing the risk of material misstatements. And what this really does is really kind of puts more of a focus on the auditor to do a more deeper dive as it relates to risk assessments procedures, to kind of bring together our audit plan and make sure we're really adequately addressing those items that are kind of the more risky points. If we could move to the next slide, there's a couple of highlights on this. Basically, it's, you'll see as part of our audit, we will be expanding some of our risk assessment procedures and even looking a little bit more at maybe some of the IT systems that are in scope to get a better and more thorough understanding related to our documentation. There may be some modifications to our procedures. This standard wouldn't necessarily be required to adopt it until after December 15th, 2023, but KPMG has early adopted this. And part of the reason for that is in the prior year, Marty and the team probably talked about the implementation of our new KPMG Clara for Client Audit tool, which was a more risk-based kind of tool to identify those risks and address. So this standard kind of goes along with that tool we've implemented. And because we've made such progress related to that in our prior year audits, we've elected to kind of implement that as an early adoption as a firm. So if we could move to the next slide. So presented in front of you is that engagement team. What Marty alluded to for the most part in the blue boxes you do see is a fairly consistent team. So while myself is new and the in-charge senior will be new, it's a fairly consistent team. We'll have the same concurring review partner involved in the engagement. Jeff will remain the same, and a lot of our specialists will remain the same as well too. And if we could move to the next slide. With that, I'm going to turn it over to Jeff.
Sure. Thanks, Jeff. So like Jeff said, I'll take you through some of our required communications. As you know, Jeff will be the lead audit managing director. We've also met with management several times, and no significant findings or matters have been discussed to date. For the scope of the audit, we will issue 4 different reports. The first being our opinion on the basic financial statements for the year ended March 31st, 2023. Part of that audit also includes a report on the consideration of internal controls over financial reporting. Just as a note, however, though, that is not for the purpose of expressing an opinion over the effectiveness of the internal controls. Third is the examination of the corporation's compliance with the state's investment regulations. And then lastly, the compliance audit of the corporation's major federal programs, also otherwise known as the single audit, that's performed under the uniform guidance. Moving on. So this slide is just a reminder that we do utilize a materiality threshold during the audit. Determining that materiality is professional judgment. It's affected by what's perceived as the needs of the users of the financial statements. And the judgments that we utilize in the materiality involve both quantitative factors, as you might expect, and then also qualitative factors as well, such as like the industry or the market, changes in management, things of that nature. This is our timeline. Nothing materially has changed in the since the previous years. As we mentioned, we've met with management already. We're set to start field work in about a month. We should wrap up in early June and then be prepared to be back with you guys at the end of the month to discuss the results. Similar to previous years, we've only identified one significant risk as it relates to the audit, that being the management override of controls. That is something that's present in all entities. And our response to that to that risk includes several steps, but includes reviewing the journal entry population, for completeness, testing a sample of those entries. We also review accounting estimates for any potential bias from management and the assumptions. And then, as always, we do apply professional skepticism throughout the audit. Onto some of the key audit areas. I won't go over all of these, but just in general, the audit approach does remain fairly similar to prior years. We do confirm a large portion of the statement net position, as you can see with the cash investments, bonds receivable, bonds payable, and such. For OPEB, we test the underlying census data. We do utilize a KPMG actuarial specialist to assist with the evaluating the assumptions in the calculation. And then moving on, the most significant piece here, Jeff already mentioned it, but with GASB 87, we will include a review of the model, review of the disclosures, test the details over the leases with the adoption of the GASB 87. And then, as always, we do inquire of leadership and general counsel for any potential contingencies that might be out there, as well as sending confirmation to any external counsel as well. As I previously mentioned, we will perform a single audit under uniform guidance. We do anticipate the Clean Water Program being the major program again this year, just based on the size and the uniform guidance rules that determine which programs would likely be tested. Program or programs for that matter. The compliance supplement really hasn't changed for the Clean Water Program over the last couple of years, so there really won't be a significant change in the audit itself or the procedures that we perform. Similar to last year, though, federal government has stopped providing the automatic 6-month extensions for the deadline that we were seeing during the COVID times. So the single audit is due December 31st, like a normal year. That said, we do plan to wrap up in the summer shortly after issuing the financial statement audit. And then this slide includes some of our involvement of others outside of the main engagement team. As I previously mentioned, we do utilize the actuarial specialist for OPEB, and our secondary partner is a GASB 75 specialist. So we do have them in our back pocket as well if any issues do arise. We utilize the National Price Desk to help value investments. And then lastly, we do take the commitment to our MWBE subcontractor firm seriously, and we are very thankful to have an ongoing relationship with both Team at Valoria and Long Island Financial Management System Services, which you did see on our little org chart as well. So we're thankful to have them to be continually involved as well. And then that, I'll turn back over to Jeff to start talking about the effective accounting standards.
Thanks, Jeff. So this slide is just more kind of a summary of kind of what we talked about before. There are a couple other standards that are applicable this year based upon the GASB adoption dates, but they don't necessarily have a major impact on the corporation here. That's GASB 93 and GASB 97. In the future years, the bigger change even next year will be GASB 96 that management, I believe, is evaluating currently, which is related to the subscription-based IT agreements. That relates to any softwares as a service, platforms as a service, or infrastructure as a service. It results in kind of a similar kind of structure if such arrangements exist that would be on your balance sheet presentation and disclosed in that manner. And then in subsequent years, there are a couple other net pronouncements coming up. GASB 100 related to some amendments associated to accounting changes and error corrections, as well as GASB 101 related to compensated absences. On the next slide, we just disclose here our U.S. transparency report that's updated constantly, provides kind of the overall spotlights related to some of our quality reports, as well as some of our approach to Accelerate 2025. There's a link on this slide that you can use to kind of review that report, but we just want to make sure we disclose that information and made it available to the committee. The next slide is just kind of talks about independence and then how that's a shared responsibility between both the auditors and management to ensure that we maintain that level of independence required. We're happy to report that as of today, and hopefully through the audit here, that we will remain independent in accordance with the AICPA standards. The next slide is just some general summaries of the responsibilities between what management is responsible for and what KPMG is responsible for related to the audit. It's worth noting that the audit, as has historically been presented, does not relieve management of their responsibilities. But that's just kind of the highlights of this slide that we've presented before. And on the next slide is just some of the basic inquiries that we usually perform throughout the course of our audits. If the committee does review these at some point and have any questions or concerns, they can happily reach out to myself. But there are no concerns or matters to date that we're aware of. That does conclude what we had prepared for today. We do open it up in case there are any questions.
I've got one, sort of specific. Jeff Mab mentioned the Team Avaloria and the Long Island, I forget the acronym. I guess I'm just interested in what do you farm things out for them, to them? Tell me their role. And I'm just interested in their role. It's just something that you guys, you don't do that commonly, having other firms come in and work with you on things.
Having experience with the state of New York, it's become a common practice, I'll say, for us with this arrangement, and we've kind of come to grow our practice to incorporate them almost if they're part of our own teams. We do develop partnership relationships, is how we view them, where we integrate their team members as part of our overall audit team. So as you see in our org chart presented earlier, we do show the members from their firms that will be participating in our team. We have them in all our planning meetings. We have them in all our status meetings, and they basically will perform some of the audit procedures that'll be reviewed by Jeff and myself throughout the audit process. So we do view them as part of our team, even though they're a separate firm, and we help teach them and use them the same tools that KPMG utilizes to kind of help bring up some of their firm practices that they can kind of take back and utilize in their own business practices.
I see. How long have you had that arrangement with them?
Over 10 years for one of them, for Avalora, I want to say, and it's approaching 10 years, I think, for Long Island. We've been through multiple cycles, even on the financial statement audit with the state of New York. That's kind of helped develop and bring that around.
Interesting. Okay, thank you.
And they've both been involved in the EFC audit over the last several years. So yeah, they've been utilized here, and they've been utilized for other public benefit corporations, state agencies, and as Jeff said, the state of New York, both on the single audit and the financial statement audit, for a number of years.
Okay. Thank you. Great.
A question. Yep. Regarding the fraud risks. So when you're evaluating that, do you also look at, like the redundancies or the dual approvals on, certain key areas? Because I don't think anyone works entirely in a vacuum where there's not some kind of double looks. And I know in accounting, like there's always double looks, there's always various approvals and places that you would catch an error or something like that. Yeah.
Yep, no, and that's exactly it. We do take a look at that. Our approach, ultimately at the end, part of it becomes more substantive, where we're looking more at specific journal entries that we determine could present a higher risk. But to your point, there's also a look at the beginning of the chain there and trying to understand the overarching process, what controls management has in place to potentially reduce that. If any of those controls are automated, we even go a little bit down the rabbit hole there to kind of say, hey, does the GITC, the general IT controls, are they designed and implemented to mitigate someone kind of overriding the system from that standpoint? So we do look at that holistic picture first of what the process is, what controls are there, before we dive into kind of more of the what I'll call substantive approach to journal entries.
Thanks. And as a follow-up on your slide number 21, you have additional inquiries. What are those charged with governance's views about fraud risk in the corporation? Is that a question you're asking us that the governance committee should discuss? What does that question mean from governance? What are those charged with governance's attitudes, awareness, and actions? Could you just talk a little bit if there's a responsibility on governance for the board?
Yeah, so we typically like to hear from not only those at management, but those charged with governance, what their views towards some of these matters may be. Sometimes we'll have offline conversations related to those with the audit chairs or the committee themselves to kind of talk through these matters. If there's any sort of concerns that you're raised about or worried about related to the organization, we definitely happily take those into consideration as part of our approach. So it helps as part of our overarching kind of risk assessment here if there's any concerns that we should be talking about.
Yeah, and I think for, over the last couple of years, probably a good example, Charlie and I, periodically check in, either during the audit or prior to issuing the audit to, check in, hear if there's anything on his mind, in addition to sort of the day-to-day. But in a lot of ways, some of those items on that list, and it's really kind of a memory jogger, really is what it boils down to. Hey, here's some, here are the sort of things that are helpful for you to see as part of a presentation like this, so that if there were concerns or anything did come up, it helps the lights go off, and so enough to reach out to us, whether through management, which is fine depending on what the concern is, or directly to us. And then as Jeff was referring to, having that ability to connect one-on-one is a healthy part of the relationship. Auditor with the audit committee who's overseeing the process is a common avenue to go through some of that any concerns or things of that nature, or just have the dialogue.
Yeah.
More than anything else.
Okay.
I've got one. There's a slide, the U.S. Transparency Report, and then under U.S. Impact Plan, I'd love you to just give us a little preview on, because of the business of EFC, it's listed here, reducing our carbon footprint. Just give me just a sense of what we would, sort of expect to hear from you, about that topic later.
Yeah, so the report's just kind of a generic report that's put together from a firm-wide standpoint of the variety of things we're doing to kind of reduce our carbon footprint. Specifically, even when we consider travel related to our trainings or international travels around the country as we kind of work with other clients, we're tracking the miles or the flights and kind of how many legs people are taking related to that, and trying to pick those flights that are reducing that impact. So there's matters of that, of what we're doing to kind of reduce that impact that we're having on the environment from an ESG kind of standpoint.
It's really kind of corporate responsibility. Aspect. In fact, I was trying to pull it up. I probably can't share it in this venue, but we have a little dashboard where we can actually each, Jeff, myself, measure. Our firm is measuring our carbon impact, and I probably use the printer more than some other folks here, and I think that I'm a little higher up on the measuring, that's why I won't share that. So it's kind of our efforts from a corporate responsibility perspective.
I love that. That is great.
Great, thank you. That's good. Any other questions?
I just have a quick one, and we don't have to go into it now, but could you just give like a really brief, like what is going to change on the financial statement or the balance sheet associated with GASB 96 with the information technology arrangement, and how we're preparing for that? Just brief, because I know we'll probably go over it again.
Sure. No, and I know management is looking into this one right now, kind of there, but the standard behind that kind of almost mirrors to an extent what's happening with the lease standard, the GASB 87, where you're going to end up having to evaluate these arrangements that you may have that could be longer term arrangements for, what we like to call more cloud computing type arrangements, right? So you're using a Microsoft tool that's a long-term project. You're trying to capture that on your balance sheet by creating a level of an asset and that corresponding liability back to present value today that then gets discounted over time, and making sure that you're kind of showing that kind of from a future obligation standpoint in your financial statements.
Thank you.
You're welcome. Anything else at this point? Seeing none, I would make a motion to adjourn if anybody agrees. There's Vita.
First, I'd like to thank Marty for his service and for your time with us over the past number of years. Really appreciate it. Thank you.
I'll second
you.
that. Yeah.
My pleasure.
Really
My pleasure.
Ditto. Thank you.
Terrific. It's great.
Thanks, Marty.
Thank you, Marty.
Thank you very much.
Speaking with you.
Great.
But welcome, Jeff.
Yes.
You betcha.
He won't be far, so if we need to, we can always grab him for a quick coffee or something.
He'll probably be by the printer.
Yeah, you, yeah, you can meet me down by the printer. Exactly.
Okay.
We're gonna have to send somebody down there for me, DEC, to check on that.
DEC's in the room. They're going to head over.
Okay, I'll make a motion to adjourn if anybody
I'll second.
wants a second. Great. I'll vote to adjourn with my two colleagues.
Here.
Are adjourned.
Aye.
Thank you so much. Great.
Thanks, Charlie.
You betcha.
Thanks.
Take care, everybody.
Thank you.